SOS Vermont sellers, save our inventory. Hi everyone, it's Julie Danaher. Welcome to this month's market update. I'm calling this one SOS, or maybe more accurately, SOI, save our inventory. Because the biggest story unfolding in our market right now is not just pricing, it's this battle between growing inventory and surging buyer demand. And the outcome of that battle will determine what happens next for home prices here in Chittenden County. Today we're going to look at how this month compares to last month, how the broader story compares to last year, and what all of this could mean as we move into the heart of the spring market. Okay, so let's start with median sales price. This month, overall, median sales price for Chittenden County came in around $434,500, down from about $499,000 last month. Single-family homes softened from roughly $558 to $522, and condo prices adjusted more noticeably from $394 to $327. At first glance, yes, this looks like a sharp drop, but month-to-month pricing changes often reflect what actually sold, not necessarily a fundamental shift in the strength of the market. When we zoom out and compare to the past year, and especially the price the last 5 years, prices are still elevated and supported by limited housing supply. So rather than this signaling a downturn, this likely reflects a market kind of recalibrating as more inventory begins to emerge. Now let's talk about supply, because this is where the suspense begins. We saw 118 new listings this last month compared to 115 the month before. So inventory is increasing, but gradually. Single-family listings remained extremely tight at 62 homes in both months, while condo listing edged a little higher, going up to 56 from 53. Compared to last year at this time, inventory levels are still relatively constrained. And that's important to know because even small increases in listings can feel dramatic after several years of severe shortage. So what we're seeing now is the early phase of rebuilding supply, not a surge that would dramatically impact pricing trends. All right, months of supply, the turning point indicator. This brings to us the most important metric in today's update, months of supply. Overall months rose from about 2.4 months last month to 3.2, which is a meaningful increase. But again, the story is not uniform. Single family supply only moved slightly from 2.2 to 2.4. That is still a very tight market and historically supports price stability and competition. Condos, however, supply jumped from 2.7 to 4.5 months. That begins to kind of show us a more balanced environment that could lead to softened pricing momentum in the segment if the trend continues. Compared to last year, we're seeing gradual improvement in inventory, but not enough to fundamentally shift again the market into the buyer territory. The key question now becomes, will inventory continue rising faster than demand, or will buyers absorb these new listings just as quickly as they appear? For pending sales, is demand re-energizing the market? Yes, buyers would agree and answered that question loudly. Pending sales surged from 86 to 121 homes. Single-family contracts jumping from 49 to 74, condos from 37 to 47. So just as inventory began to build, demand returned with real momentum. This pattern mirrors what we saw last year, periodic increases in listings followed by rapid absorption. And when demand keeps pace with supply, pricing pressure tends to remain intact. What this means for pricing going forward, and how does all of this connect? Pricing in our market is not just about today's numbers, it's about the trajectory of inventory relative to buyer activity. If inventory continues to rise throughout the year, especially in single-family homes, we could see price growth moderate or flatten. But if buyer demand remains strong or accelerates as interest rates improve, the market could quickly tighten again, staying in that seller's market. Right now, we're in a transitional moment. Supply is improving, but not yet enough to keep up with the demand. And that means pricing is going to stay on the aggressive side. So for the market now and what I'm seeing. On the ground, I'm still seeing strong pockets of competition. New sellers are entering the market. Active buyers are watching closely and ready to move. I just submitted an offer on a home where the listing agent said it's been quiet for months and had 8 new showings and 2 offers. Demand for single-family homes remains particularly intense. Expect multiple offers on the best properties in the $400,000 to $7,000 range. Outlook, the inventory question ahead. So looking ahead, declining mortgage rates could bring more buyers into the market. That would increase pressure on supply and potentially stabilize or even push pricing higher again. However, when we saw new listings this spring and summer, If inventory grows extensively, we will surely see that balance again gradually shift towards buyers. So this is why inventory trends will be the most important signal to watch in 2026. All right, bottom line for today, inventory is trying to grow, demand is still strong, and the outcome will shape pricing for the rest of the year. That's why I wanted to call this SOI, Save Our Inventory, because more sellers entering the market would create healthier conditions, more choices for buyers, and a more balanced path moving forward. But right now, sellers still have an opportunity to step into a market where supply remains limited and demand is active. And this inventory story is far from over. Please stay tuned for next month's market update.